Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into explanations on what's driving mortgage rates on a given day. And sometimes it could be coming from the economic calendar, it could be coming from headline news, geopolitical combination, and sometimes even the market. Good news, market sentiment changes. It could be good news now, bad news, and vice versa. But if you're on the sidelines looking at this, and sometimes it may just not make sense, you not understand where things coming from. We're kind of here to dig into that and hopefully provide the explanations that you need to try to make an informed decision because you're probably following mortgage rates due to either one, you're in the business, or two, perhaps you're a consumer and looking at refinancing or buying and want to see when's a good time to maybe lock in and hope or at least see where things are moving. So hopefully these videos will provide that insight for you guys. And if you guys got questions about them, please reach out. We're here to talk to you a little bit more about them. But a little bit about myself is I am a loan officer. I do work with the national lender. We do loans in all 50 states. So if you guys got questions or need any assistance in pre-approvals and financing your next property or refinancing and running numbers, we're here to help you guys out. So please feel free to reach out. But more than that, we like to be a resource for you folks. So if you guys got questions about anything, please feel free to reach out as well. So without further ado, we'll jump right into it. If you watched my video yesterday, it is kind of a light week in terms of on the economic calendar. Today we got it's not really a very minor report, and that's the wholesale inventories for the month of January. So December it rose 0.8%. Forecast is calling for 0.8%, and it came in at that same pace at 0.8% for the month of January. So we kept that same pace. And later today we'll have the 3-year auction, but this shouldn't have much of an impact on the markets. Tomorrow we do got the 10-year auction, which could have an impact on our markets and mortgage-backed security markets. So that one will be coming into effect. And then tomorrow it's a report that we really don't get into too much, but we like to kind of gauge. And that's every Wednesday we get the report from the MBA, which is the Mortgage Loan Activity Report, and it kind of gives us a lot of just some brief information to let us know if loan applications are up or down from refinance or purchase. So it gives us kind of gauge as to where the market is for those folks. So where things are leaning towards. But to kind of go towards the headline news here today, we of course it came out earlier today that the U.S. has now officially banned Russian energy prices, so to put more pressure onto them. What does that mean? Well, it means that energy prices will continue to rise as a result because we will not be using any of theirs. From my understanding, I believe maybe the media might be blowing it out of proportion, but I believe I understand that we only about 3% of our imports are coming from Russia. So it should be minuscule, but again, we're not. Unfortunately, there's nothing on our side to alleviate that. The energy companies, when the prices go up, they tend to make more money. So I guess in some ways, why do they want to raise those capacities or at least bring the price down if they're making more money, profiting more? And then of course later on, once we start raising rates, banks will be making more money. They make more money when they're higher rate interest rate environment than we do when they're in a lower interest rate environment. So if you're into stocks, hopefully that might be a little tip for you guys when you're looking to buy and or at least look where to invest, what sectors. So a little bit about that. So if you look at the mortgage-backed securities, because we've been talking about the inflation, that's been kind of the enemy for us. So we've been kind of dropping as a result. We had a huge drop yesterday. We're down another 41 basis points. I think we dropped down like 43 basis points, and now we're down about another now 42 basis points. So that translated into basically, higher rates again. So today we had some volatility, as you see here. We kind of rose upwards. We sit down right around 8:30 or so, 8:30, 8 a.m. We kind of have been dropping down since then. Especially right here, where we had the big drop at about 9 o'clock, 9:10 here. We had a huge drop here. We did rebound a little bit, but since then we've come back again. We've dropped some more. So right now we're down about 42 basis points, and that translates to, again, pricing worse than what we found yesterday. We did, for about 2 days, enjoy some rates last week, unfortunately, where we were down the 3% range. Now but that was short-lived. That was about 2 days, and then it quickly came back and brought us back over the 4% range. We'll touch on what the rates are looking like here in a bit, but First, we'll look at the 10-year Treasury. We're just under 1.87 right now, and did break, as you can see here, we jumped up almost 10 points as a result as well. So lastly, we'll take a look at the average rate for conforming limit. They do have points built into it. We'll start off looking at the 30-year fix, and that is at 4.09. Sorry about that, 4.09. And then the 15 years at 3.4. So if you've been following these, we can see these have been climbing upwards a bit. So if you guys got questions, we'll keep this kind of short and sweet for you folks. If you guys get questions, please reach out. We're here to help you guys out. If you guys like these videos, please help us out. We greatly appreciate you folks taking the time to watch and hopefully learn something. And just go ahead and hit that like button and share. We greatly appreciate that. And subscribe. You guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Bye-bye.